We're going to do a top-down analysis for AUD USD, which was pretty much the most requested pair as far as other than GJ, but GJ we did last week. So we're going to do AUD USD and then we'll work our way down to the least requested pair as far as that. So we're going to do AUD USD and we're also going to do Euro USD because that's a pair that I trade. So just in case for any of you guys that trade that pair as well, that way you guys could see what I'm looking at for the week and pretty much how I set my graph up for tomorrow. So this is AUD USD and we're going to start off on the weekly. We're going to do a top-down analysis from the weekly all the way down to like 10-15. And I'm pretty much just going to set this up like if I were to trade the pair, but obviously I'm not going to trade this pair. So right off the bat, like this is on the weekly and the first thing that catches my eye right here. So keep in mind, obviously this is on the weekly and this is going to take time to play out what I'm about to say, what I see right here, but you're going to see how precise everything is. So if you see my previous videos, you know how I draw supply and demand from the previous contrary candle before a big push. So right off the bat, we could identify this area of demand right here that was used right here, this area on the weekly, and then notice how when we touch this area, we got a reaction right off of it, this impulse right here. So this push right here created this new area of demand as well on the weekly, this area right here. So these are the two. This area here is the next major area of demand that we're working with on the weekly. So we're coming off of this area was created. As far as supplies go, this area of supplies that I'm seeing is the most recent one that was used. So we had this area here that was used, but so this area was used, right? But the areas that are not used that I'm seeing would be this one here. So this one was used to give this push. So in reality, I wouldn't mark it. I just marked it here so you guys can see how precise they are. Like price already, like imagine this was created in 2020 in last year in June, and then we touched it right now in January. Not right now, but we touched it in January of this year. You can see for the past few weeks, that's where we're getting this reaction off of. This reaction was coming off of this area of demand. So the market doesn't go to random areas. We go to very specific areas. So this area in reality, I wouldn't mark it like that. I just have it marked so you guys can see. But the areas that I do have in mind that are of interest would be this area here, this area of supply, this previous contrary candle gave the push into this area of demand. So just a hypothetical thing that could happen. Price could, we're obviously going to break this down a little bit more in detail on the daily and the H4, but very likely, let's just say when we're pushing up, we know that this would be the main target of supply. This is an area of supply here as well. It's being created that's giving this push, but the true area would be this area here. Notice how this candle here was used right here. This one is already used right here. You see how specific these areas are. Like these are true areas of supply and demand. You can see a price already taps it to the wick, and then that's where all the volume comes in. So this is the major area of supply right here, and we could just mark this one here as well. So you could break it down. So two areas of supply that we're working with, two areas of demand that we're working with. So now let's go to the daily, and we'll break this down even more, and you can see how this comes in confluence. So real quick, this is the main area of supply that we're anticipating on the weekly, right? Notice how on the daily it's in confluence. This previous contrary candle that gave the push to the downside. Notice how it's perfect in sync. The previous contrary candle, so the daily and the weekly are in confluence of this area of supply. So it's to the exact pip. Pretty much the same thing here. Notice how if we were to just, this is on the weekly, notice on the daily we have this previous contrary candle that gets pushed to the upside. So daily and weekly in confluence here as well. We can mark this area here, this area right here on demand on the daily. So we have this area that gave us this previous contrary candle that gave this push. Notice how we are very close to this area. So we have this area here, and we also have this area up here. So areas of supply that we're working with on the daily, they're just this one right here, and on the daily demand, this one down here. So let's go to H4 real quick. All right, so check this out. On H4, let me turn on, okay, oh, actually I won't turn that on. So on H4, what I want you guys to notice is, well, the first thing that I want you guys to notice if we're just looking at the daily, very likely this week that we're going to see price react off of this area here. So we could get something like this. This is what I see on the higher time frame for AUD USD, so I don't confuse you guys. So notice how we had this impulse that right here off of this area of demand, we got this push to the upside, and then we created this new area of demand, and we have this void right here. You see our price is filling this void right here. So it's very likely price is going to pull back to this void in the next few days. So we might get something like this, a little pullback, and then we come down here. And then if we get a reaction off of this area down here, we know that there is nothing stopping price on a higher time frame. Yes, we have these areas here, but what price likes to do is just use these areas here that gave this push as an area to get a pullback. Then we'll get the pullback and continue to the actual area of supply. And then this is the area where I would anticipate a bigger move off of. This area here, we have this void. And notice how the actual move was created off of this area. So we could expect to pretty much, you see how this reaction here, pretty much the same thing here. It takes time for price to pull back into these areas because we're on a higher time frame. But when price does pull back into them, you can see how we react off of them. So very, very likely, let's take this out. So very likely price is going to pull down here to continue the move to the upside. If we go to H1 and we turn on our session-based indicators, or session-based volume, let's break this down. So on H1, what we have is this. We have this area of supply right here. Area of supply right here. And we also, if we were to go, okay, so we also have that one and we have this one here. We have these two are the most recent areas of supply on the H1s because we notice that we have this previous contrary candle that is push and then this previous contrary candle that is push. So for tonight, very likely we might see something like this happen. Like I was telling you guys, something like this. And we'll get the reaction off of this area to continue to the downside. Or if the reaction does not happen off of this area here, we know that we could expect the reaction, for example, maybe price would give us a reaction off of this area to continue to the downside. So these are two very, very likely areas of supply that price could continue the sell movement from tonight. Of course, nothing is 100% sure, but very likely price is going to continue the sells from either one of this area of supply here or this area here. So what you want to do is when price touches these areas, you want to get a new area of supply created on a lower time frame like H1, like M1 or M5. And then once you get that confirmation during your session off these areas. So for example, London opens up, we don't price just breaks past this. And then on M1, M5, we get an area of supply created here and we get a reaction off of it. That's your confirmation there. You want to make sure that price is that price just doesn't blow past these areas because you literally don't know where price is going to react. These are just the higher probability areas where price could react off of. So for AUD USD, very likely price is going to pull back either here or here to continue the sell movement to the downside. Now, hypothetically speaking, because obviously nothing is 100% sure, hypothetically speaking, if price were to go up, we know that price on a higher time frame, we would have these areas here. But very, very likely, I'm telling you guys right now, we're going to see price in the next few days. Notice how this area here, we have these equal lows right here. So we're going to take out these equal lows. We just need a pullback. And then I go pull back to the upside somewhere here. And then we'll continue to the downside. So that's definitely what I see for AUD USD in the next few days. Because this is going to take some time. Let's just say, for example, tonight prices gives us a bullish move pulling up. And then tomorrow's bearish. It's going to take some time. But I'm going to give you guys the actual direction for price. And then Euro USD. Let's actually set this up from scratch completely. Because this pair... was also one of the most requested pairs, but as well as GJ. The most requested pairs were GJ and Euro USD and then AUD USD. But last week I did GJ and then we're obviously going to do Euro USD now, but I wanted to do AUD USD. And then we'll do GJ again throughout the week. But, okay, so let's do Euro USD. So let's go on the daily time frame real quick and we'll see what we're working with. So on the daily time frame, we established this area of supply right here that created this push to the downside. So we marked this like that. And then notice how I tell you guys, this takes time to play out. You need patience for this. But notice how, not patience, but it takes time. So you can't just rush price. Notice how this area of supply was created in March of last year. And we're literally just touching it right now in April, pretty much a year and a month after. And that's now we're getting that reaction off of it. So notice on the daily, we're touching this area here. We're getting this bearish reaction off of it. As far on the daily goes, I don't see any areas of demand here that I want to mark. No, we could break this down a little bit more on H4. I'm sorry, excuse me. So, all right, so let's go. On H4, let's check this out. So on H4, what we're working with is this. We have to ask ourselves, so now we're getting a pullback, right? Price is pulling back from an area of supply. We have to ask ourselves, where could price pull back to? So on the higher time frame, we identified on the daily that there was no areas of demand that we liked. But on the H4, there's this area right here, this H4 demand that created this impulse to the area of supply. So this H4 demand created this bullish move into this area of supply. Very likely when we're getting a bearish move to the downside, this bearish pullback, no areas of demand here are valid. This is not an area of demand. All these areas are touched. This area here touched right here. This area, I mean, this could be a possible area. This one down here. But the move started from here. This area here, I wouldn't say as well because this is touch here. Notice this just looks a lot cleaner. These two areas are the higher time frame demands that we're working with. We're coming off this area of supply. So let's go to H1 real quick. So on H1, let's identify this. So if we go to H1, notice how pretty much price is doing this. Let me turn this on. So on H1, this is what we're working with. Price pretty much, actually, let me turn this off. Price is coming off this area of supply right here. So price is coming off this area of supply on the daily. Price creates this new area of supply on H1. Notice how we pull back, create this move. We touch right here. We're getting this move. What I don't like too much is that price touched it twice right here. So we touched it here, actually 3 times. So we might see price break past this. But let me see. As far as supply, that's what we're working with. Demand. This area here, if we go to M15, we could probably refine it a little bit. Yeah, no, it broke past this. So let me turn on my session-based indicators and mark the highs and lows. So let me just mark the highs and lows real quick and see what we can anticipate. So if we're trading on Monday, or even if you're trading on London tonight, what you're gonna do, the way I mark my highs and lows is one previous trading day. So I would mark my high and low coming from Friday, and it's gonna be the highest and lowest point between Frankfurt to New York session. So it's gonna be between Frankfurt to New York session, the highest points and lowest points. So this is the high of day right here, and then the low of day is gonna be down here. Down there, and then the previous high and previous low of day is going to be 2 previous trading days before. So the high and low of day is 1 previous trading day, and the previous high and previous low is 2 previous trading days. So previous high of day, and then previous low of day down here. Previous low of day down there. So now we just have the highs and lows marked. Let me just go back to M15 and see what we could work with. So in reality, we need to see what London does. So I can't, like, on a higher time frame, yes, price, I am anticipating price to pull back down to this area of demand here, right? So in the next few days, I want to see price pull back here, very likely. But for tonight, we need to see what London does when they open up. What we could anticipate, the areas of interest that we have closest to us would be this area of supply right here. So we have this area of supply right here that was created during New York on Friday. So this is the area of supply that we're working with right here. And as far as areas of demand goes, on F15, this is used right here. Maybe on M5, we could find an area that could, okay. So as far as areas of supply and demand go, these are the 2 most, let me make sure actually that this is, because this is a doji. Okay, yeah. So notice how I zoomed in right now, because this is not the previous contrary candle. I wanted to zoom in because a lot of times these dojis, if you just zoom in, you can see that it's a bearish candle. So this by definition is the previous contrary candle before the push. And you can see it's in confluence with the low of day. So, I mean, we got to see what London does, to be honest, how the market opens. But, like, for example, we could, like, what I say by that is because there's no, like, I can't tell you London's going to sell here or buy here, because London might give a push, the volume comes in during London, and then price pulls back into that area of supply that was created during London to continue the move. That's what's very likely was going to happen. So something like this, we might just see something like this, like price just screws around here, something like that, and then London gives this move. Like, for example, London gives this move, and then we pull back into that area of supply that was created to continue the move to the downside. That's definitely what I see very, very likely for tonight. Either that, like a supply being created off of London, or price pulling back to this area of supply created right here during New York. As far as areas of demand go, this is the only area right here that we're working with recently. So this M5 demand, I gave this push to the upside. But how I told you guys, on a higher time frame, price is bearish. I definitely do see price pulling back down here. So we just got to see what London does, but keep these areas in mind and keep the direction that I told you guys in mind. And yeah, so tomorrow we'll update this. I'll do another breakdown along with a different pair. So I'll see you guys tomorrow. Peace.